For the longest time, I hated options trading. I believe that the most powerful tool that an investor has is the power of choice. To buy, to sell, to hold a security is your choice and no one else's. That you could ignore the noise and the otherwise weaknesses of others, lest you turn your basic advantage as an investor into a basic disadvantage. These are the words and ideas from The Intelligent Investor by Benjamin Graham. These are ideas that investors like Warren Buffett have lived by. And they are ideas that I believe in and live by today. And so with an options contract, you give up that choice. You give up what I consider to be the most powerful tool that an investor could have. However, this idea of mine was born of ignorance. Having not traded or touched options, I had no real experience to base my judgments. I only viewed it as a complicated derivative that took away your power of choice. That it was a tool that increased the risk of an investment where people could potentially lose their entire savings. But I was wrong. And in this video, I want to tell you why I've changed my mind about options trading. The tools that we have as investors change over time, as well as their effectiveness. A low-cost, passively managed index fund hasn't been around forever, and yet it's one of the most popular investing strategies today. ETFs, mutual funds, also have not been around forever. The first mutual fund was introduced back in the 1920s. Vanguard introduced the first low-cost, passively managed index fund back in the 1970s, and ETFs didn't exist until the 1990s. And yet, many YouTubers, financial advisors, and experts will recommend these types of investments. So the types of tools that an investor has is not fixed. It's not constant. It will change. And so as an investor, you must be aware of new and existing tools. It is not only that there are different tools that we can use as investors, but that the effectiveness of these tools change over time. One of the easiest and simplest examples would be a bank CD. When I was little, middle school, 20 years ago, you could get 5% interest on a bank CD. And that's great. That was all you needed to do to prepare for retirement. You just put your money in bank CDs and they would grow over time. And they had a great margin of safety. But today, that doesn't work. You can only perhaps get 0.1, maybe 0.01% interest from a bank CD. And so, at one time, a bank CD was a great investing tool to create a margin of safety for your retirement. But today, it is a terrible tool. So, the tools of investing, as well as their effectiveness, will change over time. And it is important that as an investor, we are aware of those changes. In my case, options trading is a new tool that I am currently learning about its effectiveness. Like stocks, all investments have some level of risk. And one of the more interesting things about the stock market is that the nature of the arena of stocks, of bonds, of ETFs, the risks associated can be viewed as investing, a tool for building wealth that you can use for retirement or to buy things, maybe put a down payment on a house, but could also be viewed as gambling, wild speculation. It is the same arena whether these two things exist, whether you're buying stocks, ETFs, or any other type of investment. And I mistakenly just threw options into the wild speculation category of the stock market and investing. But truly, options can be used in an investing type of way, in a conservative manner, to build and generate wealth. And so I say to you, between the different tools there are as an investor, their effectiveness, and the fact that some tools that have been touted as being very risky, very wild, and speculative can be used to actually create more diversification, more safety of your portfolio, is the reason why I believe options trading may actually be a good thing to do. It may not be good for you. It may be something that you don't want to think about or spend the time learning about. But I believe that in general, as an investor, you need to be aware of new and existing tools, as well as the effectiveness of the tools already at your disposal. So I encourage you, continue to educate yourself on the subject. Continue to learn more. Continue to explore as you become a better investor. Thank you all. I hope that this was a fairly short video. And for those of you who have watched me in the past, I have been away for several months, haven't made a YouTube video in a while. A lot of things happened to me in the beginning of the year, getting married, moving, and no shortage of projects and very important things to work on. To a certain degree, there is a level of inertia that comes with making YouTube videos. You do need to have some kind of rhythm, some kind of flow, and I unfortunately lost that rhythm for a while. This also gave me some time to reflect, to think about my YouTube channel, and I just wanted to say thank you to all of you who continue to support me along this journey. I really appreciate it, and for those of you who are new, I will continue to just put out interesting videos that I hope change the way you think about things and present new ideas to you. Alright? Thank you all, and I'll see you soon.